Hey everyone, good evening and welcome to the live stream. It's me, USMK Insights, just your average US stock investor. Like you, I'm glued to the charts, scrolling through news, diving into hot topics. And yeah, I've been stuck in losing trades too. I've chased the highs and cut losses at the worst times. Sound familiar? But that's okay. We're not some fancy Wall Street gurus or fortune-telling stock prophets. We're here for one thing: staying on top of the news, reading the market, and spotting opportunities. The US stock market is massive. No one's got it all figured out, but we can share ideas, learn together, and get better every day. If you're new here or just dipping your toes into US stocks, welcome to our Retail Investor Squad. We're here every night to break down the latest financial news in the most down-to-earth way possible. No jargon, no fluff, just stuff you can actually understand and use. I want you to walk away from this stream feeling like you get the market and can make smarter moves. Tonight we've got a packed 1 hour and a half ahead. I've lined up 3 fresh news stories covering first, is the stock market overheating? Should you cash out or double down? The second one is, are the GLP-1 weight loss drugs still a hot buy, or is trouble brewing? Third, Tesla's big move into India. Is it a game changer or just a hype? I'll be breaking down the news, watching the charts, and chatting with you guys live. I am not just throwing out opinions. I will explain why I think the way I do. If you got questions about specific stocks or your portfolio, drop them in the chat and I will tackle a few in real time. And quick heads up, super important. If you haven't joined my WhatsApp group yet, you need to. Why? Because after this stream, I will post a test summary of everything we cover. Key opportunities, stock price levels, my personal take, all free. Plus, sometimes I spot breaking news mid-trading session and share it in the group right away. You won't see that on my YouTube channel. My longtime viewers know I'm not here to scam anyone or sell courses. The group is just a place for us to avoid pitfalls and talk markets together. I also share my own charts and news breakdowns. Pure value, no ads. I promise. I will share how to join the group a few times tonight, so grab a pen or your phone to jot it down. You don't want to miss it after the stream ends. Tonight's gonna be intense, so if you don't want to miss a single point, grab a notebook or open your phone's notes app and follow along. And if you're enjoying this, I'd really appreciate that if you'd share the stream with your friends or hit that like and subscribe button to support me. Alright, let's dive into our first big topic of the night. Has the US stock market gone too wild? Is a crash coming? Let's find out. So let me show you this big news. Is the market overheating? Will earnings season be a turning point? Alright folks, let's jump into our first big topic. Is the stock market getting too hot? I know you've been asking me nonstop. This is a question I've been getting nonstop in my DMs. Recently, every day someone's asking, hey, can I still jump in? Should I pull out? Is it safe to stay in? Or S&P is almost at 6,000. Aren't we due for a crash? I get it. After this crazy market rally, I don't blame you. You're nervous but don't want to miss out. And lucky for us, Bloomberg just dropped a powerful analysis on how the market's reacting to this earnings season. And honestly, it's a big red flag. It's called Stock Market's Torrid Run. Can it survive the earnings test? Most of you probably don't have time to read news, so I'm gonna break it down in plain language and tie it to how I'm playing this market. I will show you what to do, how to do it, and how to avoid getting burned. How much has the market actually rallied? Let's start with the numbers. As you can see, the S&P 500 is up nearly 20% this year, and the Nasdaq even crazier, right? Up over 25% at its peak. Tech and AI stocks like Nvidia, Super Macro, SMCI, and AMD, and Meta. Some of these are up 2 or 3 times their value. It's like you've been raising the pig since New Year's, expecting it to sell it by December, but now it's tripled in size. Are you thrilled or starting to get a little nervous? So first off, yes, earnings season kicked off strong. Financial giants like Goldman Sachs and JP Morgan and Morgan Stanley's crushed it. Goldman even posted record-breaking revenues, but guess what? Their stocks barely budget, or worse, fell, as you can see. Regarding the Morgan Stanley, it beats expectations and drops 1.3%. Ouch! Why the muted response? Here's the kicker. Investors already priced in all the good news. It's like throwing a huge surprise party and the birthday boy says, "Yeah, I saw you setting up, no surprise here." Investors expected perfection, and when companies delivered just very good, the stocks tanked. The article had some lines that stuck with me. Let me show you. Yeah, those are some lines that stuck with me. Quote, "The market is penalizing results that fall short of expectations by the most in nearly 3 years." Oops. And the market's valuation is sky high. The S&P 500 is trading around 22 times expected earnings. Let me simplify. Oh, what's this? Sorry, give me a second. Oh. The market is expensive right now. With valuations stretched, investors get jumpy. Even small disappointments lead to sharp sell-offs. And this, quote, "The margin of error here is small. When the valuations are high and you miss, the punishment is more severe." You see here? Okay, let me translate. Stocks have already priced in all good news. If anything comes in less than perfect, it's treated like bad news. Think of it like this. Your girlfriend expects a fancy dinner, concert tickets, and probably a new iPhone for her birthday. But if you show up with a $20 necklace, she's not just unimpressed, she's mad. That's the market right now. Expectations are sky high and even decent news isn't good enough. Let's look at the Netflix. Great earnings, Subscriber growth beat expectations, solid forecast, and yet the stock plunged over 5%. Harsh, right? A real example, Amazon's 2022 face plant. Let me show you. 2022 Q2. 2022 Q2 is around June, right? Okay, here we are. Back in Q2 2022, Amazon's earnings were not even bad. They just missed Wall Street's lofty expectations by a hair. What's the result? An 8% drop overnight that dragged down the whole tech sector. I was holding Amazon at that time, didn't sell, and watched my gains vanish in 2 weeks. That taught me a hard lesson. When stocks rally hard, the room for error shrinks to almost nothing. This means the market has zero tolerance for disappointment. So, what's my take on the market now? Honestly, it feels like a pot of water that's just starting to boil. It looks calm on the surface, but the bubbles are going wild underneath. One gust of wind and it could spill over. Here's what I'm saying. The Fed says no rush to cut rates, but the market keeps climbing. Bad jobs data? Oh, that means rate cuts are coming. Great job data? Economy is strong, let's rally. This is the market gaslighting itself. It's riding pure emotion at this point. But here's the silver lining. Consumer strength is still solid. Delta and PepsiCo and Levi Strauss, they're all seeing good sales growth. Travel and consumer spending are resilient. The economy is holding steady, but the market cares more about what's coming next. Next week, this week, heavy hitters like Alphabet. I think it's this Wednesday, right? Today is Monday, and tomorrow, the day after tomorrow, Alphabet and Tesla, and they will release their report. And General Motors will report. Here's the real test. Will these giants deliver flawless results? Can they give bullish guidance to match sky-high expectations? If not, we could see sharp pullbacks in these stocks, dragging down the entire market. Will earnings season be the breaking point? I think this earnings season is make or break for the rally. If we see any of these earnings miss expectations, companies cash in on good news but give weak future guidance, downward revisions to forecasts, and so on, then a pullback is likely, and it won't be small. So here's how I'm playing it. The first one, stay cautious. I've cut my portfolio to under 50% invested, keeping cash on hand. I'm not going all in right now. The upside feels limited, but the downside risk is growing. You don't have to go to zero, but you need room to maneuver. And the second, watch critical levels. I'm watching key technical levels. For example, the S&P 500. The S&P 500's big line in the sand is 5,600. Here. Around here, 5,600. If it holds, both are still in charge. If it breaks, that's a trend reversal signal. Watch out for a deeper correction. I will share updates on these levels in my WhatsApp group, so join if you want to stay in the loop. And the third one, The third one, how I play this. Expect volatility. Good results might not boost stocks, but bad news, stocks could get crushed. Alright, let's keep the energy up and dive into a quick Q&A with you awesome viewers. I see a couple of great questions popping up in the chat, so let's tackle them with some real talk. Let's get into it. So, could this rally keep going like 2020? Are we still early in the bull market? Yo, great question, man. 2020 was a wild ride, wasn't it? 2020 was a different beast. That was the Fed going full money printer mode. Fed printing money like crazy. Zero interest rates. Endless stimulus. Pure rocket fuel for stocks. But here's the deal. We're not in that same spot now. Right now, rates are still high. The Fed's cagey. The Fed's playing it coy. And inflation's still a problem. Inflation's not fully tamed. So, no, this isn't the start of a bull market. It's more like the emotional peak of wine. It's more like we're in the emotional ninth inning with everyone hyped up. You can still catch some gains, but you gotta be nimble. Think quick trades, tight stops, and no YOLO all-in moves, no all-in bets. Stay sharp, or the market will eat your lunch. You're asking to get burned. Alright, that was a solid one. Let's keep it rolling with another question from the chat. Who's next? Oh, I see you. Firing away, let's hear it. I bought Nvidia a few days ago, up 15%. Should I hold or sell? Dude, 15%, nice grab. I'm not gonna tell you to sell at the peak or dump it all. Nvidia with Nvidia here. Nvidia's had a wide run. It's been on a tear, but I take half of the table to lock in profits and set a stop loss on the rest to protect myself, to protect yourself. Locking profits early feels way better than watching them vanish if earnings flop. Don't be afraid to book gains early. Trust me. Psychologically, losing that 15% stings worse than missing a bit more upside. Stay cool and play it smart. Love the questions, you guys are bringing it. Alright, let's keep the momentum going. Draw more in the chat and stick around as we dive into the next big topic. Who's got another one for me? Oh, quick plug. If you're struggling to track price levels or want my daily charts with stop loss and take profit lines, join my WhatsApp group. I don't spam or sell anything. Just share charts, logic, and quick takes for folks like us who can't stare at screens all day. Alright folks, we've just unpacked a ton about this crazy market rally. Hope you are keeping up. Before we move on to the next hot topic, let's hit pause and wrap up the key points from this segment. These are the nuggets you will want to take away to stay sharp in this wild market. Here we go. The market's rally is built on sky-high expectations. And earnings season could be a bad news amplifier if companies slip up. Stay flexible with your positions. Don't go all in. Watch the S&P 500 at 5,600. A break below could signal a trend shift. For hard stocks, take profits when they're up and don't get greedy. Alright? We just broke down whether this market's red hot rally is about to hit a wall. Hope you are jogging down those key levels. Now let's shift gears and dive into another sizzling topic that's got everyone buzzing. Weight loss drugs. Are they still a hot ticket or is trouble brewing? Buckle up because we're about to unpack the policy risks, money flows, and the trading tips you need to know. Here we go. Our second topic, weight loss drugs. If you've been watching the pharma stocks like Eli Lilly, where is it? Oh, here we go. Here it is. Eli Lilly or Novo Nordisk. You know they're not just rising, they're soaring. But hold up. Connecticut just dropped a bombshell saying they want to make generic versions of GLP-1 drugs. This is a big deal. What are GLP-1 drugs and why do they matter? GLP-1 isn't a drug name. It's a hormone targeting mechanism that tricks your body into feeling full, curbing appetite and helping you lose weight without starving yourself. It also helps control blood sugar and insulin resistance, making it a game changer for obesity and diabetes. Drugs like Wegovy, Ozempic, and Mounjaro, all GLP-1s. Here's a wider stat. Over 41% of US adults are obese, one of the highest rates globally. GLP-1 drugs are basically a must-have for millions, with people maxing out credit cards to get them. So, how are Lilly and Novo making bank? Their playbook is simple. They price these drugs sky high, $700 to $1,400 per shot, keep supply tight to drive demand, and push marketing through doctors and ads, rely on commercial insurance since Medicare only covers part of it. This strategy has minted trillions in market value over the past 18 months. Why is Connecticut news a big red flag? Connecticut's governor, Ned Lamont, came out swinging saying, "We're done letting GLP-1 be a rich person's drug. We want everyone to afford them." Here's my translation. The government's fed up with crazy drug prices. They're planning state-backed generics, essentially nationalizing part of the market. Imagine if generics hit the market. Medicare would likely prioritize them. Prices could get slashed in half, and the fat profit margins for Lilly and Novo, poof, gone, right? What about globally? In Europe, GLP-1 drugs are already in public healthcare systems, but at 30 to 50% lower prices. If the US follows suit, it's a massive hit to pharma profits. It's like running a restaurant where your $30 ramen gets capped at $8 and you are forced to standardize everything. Good luck making money. How's the market reacting? Here's what I'm seeing. Lilly's trading volume is spiking, but the stock's stuck in a range, not climbing. Novo stalling. Its share price has been falling for the last few days, with money flowing out late in trading sessions. ETFs like XLV, the healthcare select sector, the XLV, and XBI, the biotech ETF, are trimming pharma exposure, shifting to tech and financials. What does this mean? The smart money is already bailing, leaving retail investors holding the bag at these highs. My own close call with Lilly. I will share it with you. Regarding my own close call with Lily last year, I owned Lily when it was under $500. It was last year. Let me switch to the yearly chart. So that's, this one is 2024, last year. I owned Lily when it was under $500. Every earnings report was good enough, but when it hit $720 after Q3, I started selling. Why? I noticed the growth was slowing, but the hype was still peaking. A classic danger zone. By the time it hit 780, I was out. Not because I'm genius, but because I was scared of a policy gut punch like this Connecticut news. Sure enough, Lily's down about 15% from its peak now. Luck helped, but discipline saved me. Actually, discipline saved my life. Let's keep the vibing going with a couple of awesome questions from the chat. My friend bought Lily at $910 recently, and it's dropping. Should they add more? Let me switch back to the daily chart. So I'm eyeing Lily's support at $840 to $850. Hold up, don't go through in more cash in one policy risk screaming like this. This isn't a buy the dip moment. It's a valuation pressure plus policy threat moment. Chill until things clear up. We need solid policy news, a steady price, and some technical recovery. I'm watching Lily support around 840 to 850. If it holds there and starts looking stable, maybe dipping with a small buy. Play it cool for now. And this question, is this just a short-term noise? Isn't the GLP-1 story still strong long-term? Great question. You're spot on. The long-term demand for GLP-1 is rock solid. I say rock solid. Obesity and diabetes aren't going anywhere. They're not going away. But here's the catch. Stocks are priced on 5 to 10 year profit dreams. If generics or price controls cut expected growth from 30% to 15% a year, the stock's valuation has to adjust. The big picture is still good, but the price isn't. Short-term traders still clear. Still clear. Long-term folks, time to rework your numbers. Whew, you guys are bringing the heat with these questions. Thanks for keeping me on my toes. And quick plug, I share weekly charts on my policy shifts, sector rotations, and key price levels in my WhatsApp group. For example, I will post the support and resistance zones for Lily and Novo. If that sounds useful, check the link below in the description to join. It's free, just a pure market talk. You don't have to trade pharma, but you do need to know when to dodge it. Alright folks, we've just peeled back the layers on the GLP-1 weight loss drug craze. Pretty wild stuff, right? From policy bombshells to market moves, it's clear this sector's got some serious twists coming. Okay, before we jump into our next big topic, let's lock in the must-know points from this segment. These are the gems you will want to carry forward to trade smarter in these shaky markets. Here we go. Key takeaways. GLP-1 drugs are a hot topic, but the profit machine is wobbling. Connecticut generic push signals policy shift. Phew. Hot sectors can turn cold fast when policy shifts, right? Price controls or Medicare changes could reshape the market. Lilly and Novo face profit squeezes and valuation resets. Trading tip: don't chase the highs. Don't add to losers yet, and wait for policy clarity. My WhatsApp group has ongoing updates, including ETF alternatives and risk-off strategies. Alright, we've discussed the GLP-1 drama. Now let's switch it up and talk about something massive. Buckle up for our third big topic of the night, Tesla. Tesla's officially rolling into India. Is this a game-changing move or just another hyped up headline? Hint: it's not a get-rich-quick deal. It's a long-term play with serious potential. Let's jump right in. Alright, let's unpack Tesla's massive news. They're setting up shop in India. This is a big deal, but maybe not for the reasons you're thinking. Let's break it down and see what's really going on. Why India's a big deal? First, the basics. India's got over 1.4 billion people, making it the world's most populous country. It's not as wealthy as China, but it's young, urbanizing fast, and super tech savvy. Policy-wise, India is all in on renewables, electric vehicles, solar, you name it. They want cleaner air and less reliance on imported oil. The kicker? India's offering subsidies and tax breaks to companies like Tesla that set up local factories. Sound familiar, right? It's a lot like when Tesla first entered China, a small bet that turned into a gold mine. Elon's move here is strategic, planting a flag in a massive future market. But why isn't the market going nuts? Here's the deal: Wall Street's brutal. No orders, no excitement, no profits, no rally. This Indian news is a long-term win, but it's not dropping cash in Tesla's pocket tomorrow. So the stock Tesla, TSLA, isn't spiking. It comes down to your investing style. Are you trading next week or building wealth for next year? Think about Tesla's Shanghai factory. When it was announced, people called it a pipe dream. Too risky, too expensive. But Shanghai Gigafactory became Tesla's most profitable plant, sending the stock from 3 digits to 4. India could be that kind of slow burn win. How should different investors play this? For short-term traders, focus on the charts. I'm watching the $285 as a key level for Tesla. If it holds, the trend is still healthy. So anyway, I'm watching the $285 as a key level. If it holds, the trend is still healthy, and you can try buying dips with a stop loss in case news doesn't spark a rally. If it breaks $285, cut your losses and wait for the next setup. Short-term trading is war. Position and discipline are everything. Mid-term investors, if you believe in Tesla's global expansion, this Indian news is a plus. Don't sweat daily price swings. Ask yourself, does this move boost Tesla's revenue potential, global reach, and valuation over the next 3 to 5 years? If India becomes half as successful as China, that's huge. Tesla's not just a car company anymore, it's a global clean energy player. For newbies or onlookers, if you're not in Tesla but feeling FOMO, chill, the market is full of opportunities. You don't need to chase every headline. Wait for a clear technical setup, like a pullback with low volume or a bounce off a key level. Don't be the guy buying the first day of the news and getting stuck at the top. Alright? Let me share a quick Elon story. Elon loves to downplaying big moves. Think back. Shanghai factory? Oh, just a pilot. Cybertruck? A niche product. Starlink? Won't make much money. Every time he's sandbagging, those small bets turn into game changers. So when he calls India a small bet, yeah, I'm not buying it. Musk's small is the worst huge. Alright, folks. We're in the thick of this Tesla in India talk and it's getting juicy. You're all bringing some fire questions to the chat. Love the energy. Let's pause the deep dive for a second to tackle a couple of your questions about how to play Tesla right now. I mean, how to play TLCA right now. Big thanks to my awesome audiences for joining the chat. Here's what you're asking. I just bought TSLA. Will this India news spark a rally? Should I buy more? Wow, jumping into Tesla, bold move. Don't rush to pile on more just yet. Keep your eyes on two things. First thing, technicals. Is TSLA holding above $285? That's your line in the sand. And the other one, news follow-ups. Look for real progress. Are there concrete steps like factory deals, land approvals, or India-specific pricing? For now, hold what you've got and wait for real catalysts before piling in. Patience is your friend here. Alright, let's keep the Q&A rolling. Who's got the next one? Oh, here comes a great question about Tesla's global growth. Let's dive in. I don't own Tesla, but I want in on this global growth story. How should I approach it? Smart move thinking big picture. Here's how I'd play it. Start small with a 1/3 position to get some skin in the game. And then wait for the technical confirmation, like a pullback that holds steady before adding more. Probably before adding the other 2/3, and then keep an eye out for hard news, orders, production deals, or subsidies. That's your signal to scale up. And finally, Tesla's not a hype stock anymore. It's a global expansion play that needs patience and strategy. Alright, okay, you guys are killing it with these questions. Love how you are thinking about strategy. Alright, before we wrap this Tesla talk, let me share how you can stay ahead of the game and a quick thought to send you off. This mix of midterm vision, short-term timing, and the global news is exactly what we break down every day in my WhatsApp group. I'm dropping charts on how news moves stocks, key entry or exit points, and swing trade ideas. If you're holding Tesla, Nvidia, or Apple, check the link in the description below. Drop Tesla in the chat probably, and I will pull you in. Just drop Tesla in the chat. No cost. No cost. Let me repeat this. Very important. I want you to know, no cost. Just a pure market talk. Okay? Alright. So, Elon's moves always seem low-key at first, but they end up shaking the world. India is not a quick cash grab. It's a gold mine for those who play the long game. The real winners aren't the ones chasing headlines, they're the ones planting seeds early and nurturing them with discipline. And that's a wrap on Tesla's India adventure. You guys brought some serious heat tonight. Thanks for sticking with me. Let's keep the vibe going. Drop your thoughts in the chat or stick around as we hit our next big topic. What's next? Let's wrap it up with a quick recap, some final Q&A, and a push to keep you moving forward. Tonight's big takeaways. Market's red hot, but earnings could be the pin that pops it. The S&P and Nasdaq are riding high on expectations. If earnings disappoint, good news turns bad fast. Watch the 5600 on the S&P. Below that, we're not just correcting, it's a trend shift. And GLP-1 drugs are shaky. Don't chase Lilly or Novo. Because Connecticut generic drug push signals price controls are coming. The insane profit model is cracking. Avoid chasing highs. Wait for policy clarity and watch Lilly's 840 to 850 support. And Tesla in India is a slow burn win, not a quick buck. India's a massive market, but it's no overnight rocket. TSLA, where is it? Here. TSLA's key levels are $285 short term, $285 short term, $272 mid term, and $255 bottom. Long-term bulls should love this. Short-term traders need to be tactical. Oh, I saw someone dropped a new question here. Let's hear it. I listened all night but still feel lost. What do I do? Oh, my answer is don't stress. I started clueless too. Tune in daily, look at my charts, take small notes. You don't need to master it overnight. Just keep showing up and you will start getting it. And here comes another question. I want to learn your levels and models, but I don't have tools or time. That's what my WhatsApp group for. That's what my WhatsApp group is for. I post daily charts with clear buy and sell levels and explanations. On weekends, I share a pre-market strategy list covering tech stocks, and ETFs and hot sectors. Spend 5 minutes a day reading. Ask me questions and you will build your own instincts. So here's why you need to join my WhatsApp group. Look, the live stream is great, but markets move fast. We all know that. News hits, levels break, and opportunities vanish between streams. My group is where the action happens. Daily charts with key levels, indexes, hot stocks, trade model breakdowns like the breakout trio, weekly recaps of my trades and why I made them. Got a stock you're stuck on? If you've got a stock that you're stuck on, DM me. I will try to help. It's free, no courses, no stock pushing, no ads, just retail traders like us sharing ideas and watching each other's backs. If anything tonight clicked for you, a chart, a strategy, a light bulb moment, do me a favor. Smash that like button, hit subscribe, and ring the bell. Drop a comment. What did you learn? What's your next move? Any aha moments? Share this stream with your friends, coworkers, or trading groups. Tailored advice for you. For newbies, start with charts and learning not to chase hype. Write one sentence a day recapping what you learned. In 3 months, you will be a different trader. Struggling traders, if you're losing money, check your logic. Are you too emotional? Try my breakout model on a few stocks to find your own rhythm. For long-term investors, focus on policy trends, valuation shifts, and fund flows. You don't need to trade daily, but you do need to watch the markets pulse. Trading isn't about being right every time or making a killing on every trade. It's about understanding the market's structure, knowing the logic behind moves, dodging risks, and riding trends. You're not alone. I'm here every night, breaking down news, reading charts, and hunting opportunities with you. Thanks for hanging out tonight. You're the reason I do this. Drop your thoughts in the comments, join the WhatsApp group, and let's keep this going tomorrow. See you in the group, and see you in the markets, and let's tackle the ups and downs together.